Question 196. A clause in a promissory note that prohibits the borrower from paying off the loan before the maturity date is called a lockout clause, b. lock-in clause, c. protection clause, d. maturity clause. Correct answer is b. lock-in clause. Protection clause is a general term and doesn't refer to a specific clause about prepayment. Maturity clause simply states the date when the loan is due. It doesn't prohibit prepayment. Lock-in clause, sometimes used interchangeably, lockout clause, is the more standard term. A lock-in clause can also refer to locking in an interest rate. A lock-in clause is period of time written into a loan contract prior to which the borrower may not repay any of the principal. Question 197. Junior loans are usually originated by a. commercial banks, b. savings and loan institutions, c. private sources, d. insurance firms. Correct answer is c. private sources. While banks do originate some junior loans, they typically prefer the security of first mortgages. Similar to commercial banks, savings and loan institutions primarily focus on first mortgages. Insurance firms primarily invest in more stable, low-risk investments, and junior loans are considered higher risk. Junior loans, which are subordinate to primary mortgages, are often provided by private individuals, investors, or private lending companies. These sources are more willing to take on the higher risk associated with junior liens. Question 198. Judy's will leaves her friend, Ben, the right to use, occupy and enjoy Judy's townhouse until her other friend, Gina, dies. Upon Gina's death, the home becomes the property of Judy's son. Ben is a remainderman, b. life tenant, c. tenant in common, d. none of the above. Correct answer is b. life tenant. A remainderman is the person who receives the property after the life tenant's interest ends. Judy's son is the remainderman. Tenancy in common is a form of co-ownership where multiple people own a property. Ownership percentages can vary. There's no automatic right of survivorship, meaning a deceased owner's share goes to their heirs, not the other owners. Each owner can individually sell, gift, or will their share. All owners have the right to use the entire property. Ben has the right to use the property for the duration of another person's, Gina's, life. This is the defining characteristic of a life tenant. A life tenant must not engage in acts that might permanently damage the property, thereby harming the interests of the reversionary or remainder estate. Question 199. The elevators in a high-rise apartment building stop working, and the landlord fails to make timely repairs. The renters who live have the right to move out without liability for further rent, under the concept of a. fraud, b. constructive eviction, c. inconvenience, d. punitive malfeasance. Correct answer is b. constructive eviction. Constructive eviction occurs when a landlord's actions, or inactions, make the premises uninhabitable or unusable, effectively forcing the tenant to move out. The failure to repair essential services like elevators in a high-rise building would likely qualify as constructive eviction. The tenants can sue to recover possession or for damages based on the landlord's breach of the covenant of quiet enjoyment. Question 200. The transfer of the entire leasehold interest in a lease from the original lessee to another party is an a. club sandwich lease, b. sandwich lease, c. sublease, d. assignment. Correct answer is d. assignment. Club sandwich lease is not a standard real estate term. Club sandwich lease is not a standard real estate term. A sandwich lease happens when a lessee subleases the property, and then that sublessee subleases the property again. The person in the middle is in a sandwich lease position. A sublease occurs when the original lessee transfers only a portion of their leasehold interest to a new tenant. The original lessee remains liable to the landlord. An assignment occurs when the original lessee transfers their entire remaining leasehold interest to a new tenant. The new tenant becomes directly liable to the landlord for the remaining lease obligations. Question 201. If a seller and buyer make a purchase agreement that contains a contingency clause, this could mean that a purchaser will pay the seller half in cash and half in negotiable securities. B. Good faith deposit will be considered liquidated damages. C. Sale depends on whether the purchaser can first sell his commercial property. D. None of the above. Correct answer is C. Sale depends on whether the purchaser can first sell his commercial property. A contingency clause in a real estate contract makes the sale dependent on a specific event or condition being met. In this case, the contingency is the buyer's ability to sell their commercial property. If they can't sell it, the purchase of the new home may not proceed. Question 202. A written summary of the chain of title available in public records is called an A. Acknowledgement of title. B. Abstract of title. C. Chapters of title. D. Title servicing. Correct answer is B. Abstract of title. An acknowledgement of title is a formal declaration before a notary public or other authorized official that a document was signed voluntarily. Title servicing is not a term related to the chain of title. Title servicing generally refers to the services done by a title company, like maintaining records or processing title insurance claims. Chapters of title is not a standard real estate term. Abstract of title is a condensed history of the ownership of a particular parcel of real estate, summarizing the various deeds, mortgages, and other documents that have affected the title. It is based on information found in public records. Question 203. Which of the following is correct? A. The maximum lease on city property is 51 years. B. The maximum lease on agricultural property is 99 years. C. The maximum lease on non-agricultural property is 51 years. D. None of the above. Correct answer is D. None of the above. The maximum lease term for agricultural land is 51 years. The maximum lease term for city land is 55 years. The maximum lease term for non-agricultural land is 99 years. Question 204. Louis and Maria are single people who own real property as joint tenants. Unbeknownst to Louis, Maria uses her interest as security to borrow $25,000 to pay for a new car. A few months later, before paying off the debt, Maria is killed in a car accident. Regarding the joint tenancy, Maria's death means A. Louis owns all of the property free of the encumbrance entered into by Maria. B. Louis and the lender are tenants in common for the property, each owning a half interest. C. Louis owns all of the property free of the encumbrance entered into by Maria, but is liable for the remainder of Maria's loan. D. Louis and Maria's heirs own the property as tenants in common, each liable for the remainder of Maria's loan. Correct answer is A. Louis owns all of the property free of the encumbrance entered into by Maria. Joint tenancy includes the right of survivorship. If one joint tenant dead, the surviving joint tenants automatically inherit the deceased tenant's interest. In most jurisdictions, a lien or encumbrance created by one joint tenant does not necessarily sever the joint tenancy. When Maria died, her interest in the property automatically passed to Louis. The encumbrance that Maria placed on her interest is extinguished upon her death, and does not pass to Louis. Therefore, Louis becomes the sole owner of the property, and the encumbrance created by Maria is extinguished. Question 205. A real estate brokerage firm was paid $40,000 in total commission for the sale of a property. Payments to the firm included 8% on the first $200,000, 6% on the next $200,000 and 5% on the remainder. The property's sales price was A. $400,000, B. $550,000, C. $640,000, D. $750,000. Correct answer is C. $640,000. Here's how to calculate it. Commission on the first $200,000, $200,000 by 8% equals $16,000. Commission on the next $200,000, $200,000 by 6% equals $12,000. Total commission from the first two brackets, $16,000 plus $12,000 equals $28,000. Remaining commission, $40,000 $28,000 equals $12,000. Sales price for the remaining commission, $12,000 per 5% equals $240,000. Total sales price, $200,000 plus $200,000 plus $240,000 equals $640,000.